Imagine waking up to find yesterday's rent could only buy today's bus ticket. That was life for millions of Argentines when prices doubled every 50 days, wages melted by lunchtime, and entire paychecks lost half their value before the weekend. This video delivers exactly what the title and thumbnail promised: the almost impossible escape of a country, branded serial defaulter. Its sprint from bankruptcy to boom. Why did Argentina go broke in the first place? What shock therapy move chopped hyperinflation from a soul-crushing 200+% to something central bankers call normal in barely 24 months? And will the boom last, or is the next bust already loading? Here's the 3-second answer. Decades of spend now, print later policies finally snapped. A chainsaw-waving libertarian yanked the monetary plug, and the recovery's life support now rests on 3 ticking time bombs you'll meet in the next 8 minutes. History first, because disasters never start on page 1. At the turn of the 20th century, Argentina was richer than France. Steamships unloaded immigrants who called Buenos Aires the Paris of the Pampas. Then came the Great Depression, a coup, and a pattern of short booms financed by hot money, followed by busts when the money fled. In 1991, the convertibility plan locked 1 peso to $1. For a while it worked. Shiny malls, cheap electronics, imported cars everywhere. But the government borrowed abroad to defend the peg. Wages lagged productivity, and provinces issued script that behaved like monopoly money. When Brazil devalued in 1999, pressure snapped the peg. What followed was the biggest sovereign default the world had seen. Back in 2001, Argentina stiffed $95 billion of debt. The peso crashed. Furious crowds shattered bank windows, and 5 presidents rotated through the palace in 2 chaotic weeks. A soy export boom glued the economy back together. Yet the glue was thin. In 2018, a drought shrank farm income, global rates ticked up, and investors ran. President Mauricio Macri accepted the International Monetary Fund's largest standby loan in history, $57 billion, hoping it would calm markets. It bought 12 shaky months, then COVID blew another crater in government finances. By late 2023, headline inflation sprinted past 200% a year. Poverty pierced 45%, and supermarkets updated price tags twice a day. Enter Javier Milei, the self-styled anarcho-capitalist who campaigned with a plastic chainsaw, rock star hair, and a promise to detonate La Costa, Argentina's entrenched political class. Commentators laughed. Voters did not. In November 2023, he won a landslide runoff, carrying every province except Buenos Aires. On day 1, he served a brutal cocktail: a 54% devaluation, deep energy subsidy cuts, a ministry freeze, and a vow to print 0 pesos for deficit spending. To reassure creditors, he kissed every IMF target and swore Congress to a zero-deficit law. Pain arrived by motorcycle courier. Light bills tripled, subway rides cost as much as taxis, and thousands of public workers lost jobs. The peso, once held aloft by a maze of 14 exchange rates, floated closer to reality. Importers yelled, exporters sighed with relief. Within 3 months, the central bank posted its first primary surplus since 2008 and stopped the money printer. Monthly inflation, still terrible, tumbled from 25% in December to single digits by April. Pattern interrupt 1. Meet Valen, a 19-year-old empanada vendor turned TikTok economist. Each dawn in Rosario, he erased yesterday's chalkboard price and replaced it with the latest inflation print. Views exploded. Brands sent flour. Politicians sent hate mail. When the monthly rate slid below 5% in May 2025, Valen pivoted from rant to recipe videos. Proof that national mood can flip faster than pastry dough. But shock therapy means nothing without growth. That brings test 2. Agriculture rebounded on better rainfall and a currency farmers finally trust. Vaca Muerta, the world's 2nd largest shale gas field, drilled new wells now the tariffs actually cover costs. Lithium and Salta, in hot brine under the desert, drew battery giants who once skipped Argentina because capital controls made dividends evaporate. In a twist nobody predicted, the mighty truckers' union accepted digital tolls in exchange for targeted tax cuts. Result? The economy jumped 7.6% year over year in the 2nd quarter of 2025, and container traffic through Bahia Blanca hit record highs. Story interlude. Lucia, a freelance designer in Cordoba, used to get paid in US dollars that hit a shadow exchange at half value. Today, capital controls easing. She keeps a dollar wallet on her phone, converts to peso-linked stablecoins when rent is due, and runs her business without bribing a Cueva money changer. Multiply Lucia by 10 million professionals and you glimpse the hinge that flips slumps into booms. Ordinary people trusting tomorrow's money. Midpoint twist. The peso strengthened 40% in real terms, making imported sneakers cheaper and soy exports less juicy. Analysts whisper about a future current account gap. Small shops grumble that credit still costs a fortune. Milei's advisors call the discomfort detox. Critics label it relapse in disguise. In Argentina, every boom plants the seeds of the next bust. Humor beat. A meme shows the peso dressed as Loki bragging, "I'm inevitable," while the dollar wields Thor's hammer labeled Milei. Even in jokes, hard money owns the conversation. 3 checkpoints now decide whether the escape sticks. First, labor reform. The code, layered since Juan Perón, is a labyrinth of mandatory bonuses and rich severance fees. Milei wants a Danish-style hire and fire model. Unions promise street blockades. Second, the YPF expropriation lawsuit in New York. A multi-billion-dollar penalty could vaporize those fresh reserves like water on a grill. Third, the October 2025 midterms. If populists retake Congress, the spending taps could reopen overnight. Still, early signals look stronger than skeptics admit. Net reserves turned positive by April 2025. The IMF resumed disbursements ahead of schedule, praising exceptional compliance. A 7-year bond issued in May oversubscribed threefold at an interest rate below Mexico's pandemic highs. Inflation expectations for 2026 sit south of 30%. Science fiction 2 years ago. Pattern interrupt 2. Imagine 2 neighbors grilling steak. One measures heat patiently, the other dumps kerosene for quick flames. The economy is the steak. Milei, love him or hate him, cooks low and slow. But hasn't Argentina dollarized? Not fully. Complete dollarization needs enough greenbacks to swap every peso in circulation. Until then, the peso lives in narrower lanes, while fintech apps quietly dollarize daily life. Grocery chains offer pay in dollars, get peso cashback schemes. Retirees hold social security deposits in digital T-bills that adjust with the US CPI. Side note story. Mario, a 65-year-old taxi driver in Mendoza, once stored savings in bricks, literally buying construction materials to hedge inflation. Now, he tucks spare earnings into a dollar stablecoin with 2 taps on his daughter's hand-me-down smartphone. He jokes the new wallet is safer than his mattress and lighter than a wheelbarrow of bricks. Bank savers also noticed the climate shift. In 2023, a dark joke claimed the only safe plazo fijo, Argentina's fixed-term deposit, was a roast beef you grilled before the peso spoiled. By mid-2025, 3-month deposits again pay positive real interest. Small investors leave cash in banks longer than a weekend for the first time in a decade. Credit card issuers, who had shortened billing cycles to 15 days, quietly restored the normal 30. Even corner kiosks that once earned more from currency spread than candy now profit more from phone cards and empanadas. Early adopters treat that small change as the clearest signal yet that chaos can truly retreat. That quiet credit thaw matters more than any headline statistic in building middle-class confidence. Global relevance check. If this experiment works, debt-plagued nations from Nigeria to Turkey may copy the recipe. If it fails, textbooks will add shock therapy malpractice next to the chapter on Russian hyperinflation. Let's time travel to 2030. Inflation headlines are boring. Single digits, same as Spain. Liquefied natural gas from Vaca Muerta powers assembly lines on 2 continents. Lithium from Salta fills 90 million EV batteries. The peso, if it still exists, trades like chilies, sturdy enough that no one checks the rate in the middle of dinner. University students argue about housing prices instead of grocery prices. Zoom back to the bleak winter of 2023. Pensioners camped outside ATMs before dawn because machines ran out of cash by noon. Interior town stores closed at 4 just to reprice labels by 5. Wedding planners wrote contracts in kilos of beef because meat tracked the dollar better than any index. When money becomes a hot potato, every job turns into currency arbitrage. The speed of inflation's decline stunned traders. Headline inflation slid from more than 200% in 2023 to under 50 by mid-2025. Producers stopped indexing tomorrow's stickers to yesterday's panic. Supermarkets print weekly flyers instead of daily ones. Car dealers, once cash only, now offer peso loans. Still, pricey but possible. Critics respond, real wages fell 15% during the first 6 months. The finance minister calls it the entrance fee for credibility. The government counters with payroll tax cuts, child benefit top-ups, and fast fast-track permits for solar farms, betting productivity will lift pay faster than subsidies ever did. Geopolitics comes into play. Brazil still toys with state bank muscle. Chile debates a constitution that might tighten control over copper. If Argentina locks an open capital model, investment flows could pivot south, pressuring neighbors to follow or lose capital. Picture Buenos Aires morphing into the Miami of the Southern Cone. Sky-high finance hubs and crypto exchanges lining Puerto Madero's docks. Humor beat too. Online polls asked what to name a new stable currency. Top picks, Messi coin, Bife bucks, and naturally, chainsaw peso. Jokes aside, citizens now treat money like software you can upgrade, not a decree you must fear. Everything, in the end, returns to trust. Governments can legislate supply, regulate banks, and slash deficits, but none of it sticks until millions believe tomorrow will roughly resemble today. Trust, once shattered, rebuilds brick by brick. A weekly price list here, a 3-month wage contract there, a savings goal next payday. That invisible construction, more than any spreadsheet, decides whether Argentina's boom endures. One last pattern interrupt for you. Imagine a future travel vlogger shooting Buenos Aires in 4K. Instead of filming bartering locals and graffiti about hunger, they film startup demos and rooftop parties accepting crypto taps. That highlight reel, if it ever goes viral, will mark the moment the escape became the new normal. Ready for the final call to action? If you want the next profitable playbook, this time how to earn AI paychecks in emerging markets, tap the playlist floating on screen now. Stick around because the next chapter is even wilder. Your 8-minute deep dive starts in 3, 2, 1.